All right, we are live. So welcome back to Dapp University. So today we've got a lot to talk about in our live stream today. Okay, we're going to look at the crypto markets first and foremost, because I'm sure that's one of the first things in everybody's mind as they were, watching the space. Since our live stream we did yesterday, we've seen a significant drop in major cryptos like, Bitcoin, Ethereum, pretty much everything across the board has taken a significant blow. So we're going to look at that. We're going to look at a lot of other things that have happened in the space since our live stream yesterday. Again, we do these live streams Monday through Friday on this channel. Just subscribe, turn on notifications. You're going to find out about those whenever we go live. We're going to answer some of your questions and a whole lot more. So if you're on here, hey, I'm Gregory. On this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step by step, start to finish, then definitely head on over to dappuniversity.com/bootcamp to get started today. All right, so we got people jumping in the chat here. We got Technically, Dale, Codia, Latricia, My Football, Coach App, Healthy People Project, it's Ardal, Machiavelli, Automatic Beats, Jay Lee, Alden, Robert, welcome. All right, so let's jump into this. So let's just take a look here. I'll pull up these crypto charts on my screen here. So let's get into this. Let's talk about the crypto market and really what's going on right now. So let's just find here. Hold on. I had this nicely prepared on my screen, and then I hit live, and my screen got like totally messed up here. All right, so let's jump in. So crypto has taken a significant hit since our stream yesterday. Okay, basically as we were going live yesterday, ETH looked like it was coiled, ready to start doing its thing. Especially ahead of the Ethereum merge, which is coming up next week. We'll talk about that a little bit more in a minute. All right. And then we saw this massive dump. Okay. So similar to a lot of other stuff like Bitcoin. Okay. So we saw Bitcoin do the same thing, and look at this pattern is pretty much the same across the board. So what do we know about this? All right. Because this is a kind of a mystery to a lot of people. Because, one of the biggest things to talk about crypto this year is high correlation to stock market. Okay. But if you look at a lot of other stock indices, since yesterday, we don't really have the same like mirroring pattern. Okay. I mean, even if you look at, riskier stuff, not riskier, but stuff that has a little more volatility than like the S&P 500. All right. You even look at like the NASDAQ 100, like looking at our correlation with tech, we really don't see the same pattern play out. So this does look like something's happening specifically in the crypto markets themselves, okay? Although there can be lots of, macro factors that could cause this, exacerbate the problem, but this does seem like to be a crypto-specific issue in and of itself. So what do we know about it, all right? So it definitely looks like Bitcoin was the leader in the sell-off yesterday, okay? So if you kind of put things up on a time interval, okay, you can see that Bitcoin was the one that really started off this whole thing, kind of dropping from here to here pretty quickly, and then everybody else kind of followed suit, entered the party for Ether early. So, we have some clues into kind of what was going on here. We can look at different liquidity markets, to see what was happening in terms of price changes that sort of caused this and made it go further. Okay, it seems like there's definitely a liquidity crunch going on here for sure. And then also when that trickling over into the ETH world as well, with the DeFi ecosystem. Yesterday I talked about all the sort of chaos that could happen around the ETH merge with liquidity crunch and usability of the actual Ethereum ecosystem as people are pulling ETH out of smart contracts that are locked into DeFi, and how that could cause some contagion risk to other things where you have this DeFi ecosystem that's totally layered on top of each other, and that anybody who's maybe like leveraging that stuff, some of that could unwind, and we're already starting to see some of that play out as well. So that could have a big factor. But let's look at this tweet thread because I think I had some interesting data in it. So analyzed data from a couple of the exchanges related to today's drop in the crypto market. Of course, focused on Bitcoin because it was seen as the Bitcoin was the catalyst. Okay, so let me just pull this up here and look at some of the data. So the basically here's the trade data from exchanges. So this is a plot from different exchanges across the board. He's talking about what it looks like to be a market maker in this. But basically, you can be seeing that due to high volatility and latency of the order execution, liquidity on Bybit disappeared. All right, so we had a huge liquidity crunch. All right, so basically, a bunch of people were liquidated, and no market maker wanted to take this liquidity. Okay, so you have to understand. Liquidity is a huge factor in price when you're talking about exchanges. Okay, so let's say that you wanted to sell some Bitcoin. Okay, and you're in the middle of it. Works both ways, right? When the price is pumping and when the price is dumping. All right, so let's say that Bitcoin is going up like crazy in a bull market, and you want to buy a bunch. Like let's say you got like like $50 million worth of Bitcoin or $50 million and you want to buy some Bitcoin, right? Like you're a whale, right? And you want to execute that order. Now, you don't really just like click market buy $50 million on an exchange, but let's just say that you would for example purposes. Well, the order book depth on any given exchange may not support that. Okay, so like let's say you try to just click market buy. What it's going to do is you're not going to get a favorable price because they don't really have that liquidity. So you're forced to buy it essentially at an average price that's higher than what the current market rate is because they can't just sell you $50 million worth on the spot like that at the exact quoted price everybody else is getting with much smaller buys in the thousands of dollar range, right? So it's a similar type of thing when you're selling, okay, and then nobody wants to buy it. Okay, there's always a buyer and seller. There's always a counterparty inside of a trade like this. You're forced to sell at a worse price, okay, and that can start to be sort of the needle that pops the balloon, all right, that causes everything else to sort of ripple out into other, it can be the little catalyst that makes the snowball start rolling down the hill. Okay, because if you have all this Bitcoin, you're like, I gotta sell it now, and there's no liquidity, like nobody wants to buy it from you, then basically that can make the price drop significantly because somebody's always gonna buy it. All right, the answer's never no. The question's always how much, right? Like I say, Bitcoin did really terribly, right? And then let's say the Bitcoin price drops like $1,000, right? And then the assumption there would be like nobody wants to buy your Bitcoin, right? But somebody's always going to buy it, right? Just always a question of what's the price. So that's what we're talking about here. So we saw a massive liquidity crunch, and we're talking about an exchange like Bybit that has a heavy use of leverage. Okay, whenever you have people that are super levered up like this and the price moves significantly, then boom, that can completely wipe people out. Because if you don't really trade with leverage in crypto, you don't know how it works. Well, basically, you have to like lock up a significant amount of funds in order to, trade with leverage. And it's not the type of thing where like, you get margin called and then you have like this time to pay stuff. It's like, no, boom, like your money's just gone. Okay. And so that's what it is. And again, if you don't understand how trading with leverage works, basically, let's say that you had $1,000 and you wanted to trade with $10,000, that's 10x leverage. Okay. Basically. So you're essentially, borrowing $9,000, and you're getting exposure to $10,000 worth of crypto assets, okay? And then you get, like I said, the price goes up, all right? It goes up by, 10%. Well, that's 100% return on the entire thing. So you get the return. Like let's say you successfully executed that, then you pulled your money out. That's, getting 100%. Okay, return. You don't get to keep the $9,000 you borrow, but you get the return plus your principal back, right? But the door swings both ways, right? Because if the price moves negatively on you and you get liquidated, then you're done, right? So anyways, that's kind of what happened. And when you see these liquidations happen, they can sort of cascade and just, depress price further and further and further. Okay, you can see some of that happening here, and liquidity. This process is playing out multiple times over and over and over again. Basically, liquidity drying up, people who are leveraged, either going long or short. These are probably mostly levered longs. I don't have the complete data, but that's most likely what was happening here. So anyways, that was a catalyst. These are Bitcoin definitely a catalyst for a lot of this stuff. Yesterday, all right, looks like that's what started it. Looks like this was definitely a crypto-specific problem. Now, I also want to focus to the ETH side of things because we are starting to see some of the chaos that I talked about yesterday ahead of the merge. play out. All right, now not necessarily on a complete scale, like not on a massive scale, but we're already starting to see some evidence of this. So yesterday in our stream, I talked about the Ethereum merge coming up and how this could cause some chaos in the ETH space, and also how that could affect the ETH price itself. All right, so basically, we've got the Ethereum merge coming up next week. This is Ethereum moving from proof of work to proof of stake, and that's a major technological shift. And fundamentally, like, not that much is going to change about the smart contracts, like on the blockchain, right? Not that much is actually going to change about the usability, but there's all this tech built on top of it that could have disruption of service, okay? And then all these users who might temporarily change their behavior right before the merge and right after, and all this stuff could cause a perfect storm to essentially, kind of shake things up a little bit, cause some chaos, and that could hurt some people financially. So why is that? Well, basically, you've got things like bridges that go over to the Ethereum ecosystem that, could stop working, or they might pause things, like literally just like pause stuff just to be safe. Same thing with layer 2s. You might have like layer 2 scaling solutions might pause activity for a temporary period of time. You might have centralized cryptocurrency exchanges suspend deposits or withdrawals for a certain amount of time. Okay, all this stuff kind of just like puts pause on a lot of the crypto ecosystem, even if it's for a brief period of time, but that can kind of change things. Also, user behavior, when you're talking about all the people who hold ETH and they're deposited into things like smart contracts for DeFi, a lot of those people are going to take their funds out of those smart contracts completely prior to the merge to mitigate any potential risks of those applications not migrating successfully, okay? And also, there's other incentives to hold ETH in your wallet completely on your own because of potential Ethereum forks, okay, where you might get free coins. So there's lots of incentives around this. And, that user behavior, a lot of these people are providing liquidity to these DeFi applications, and it can kind of potentially turn into the same situation like we're talking about in these centralized exchanges where, well, basically, what if all the liquidity in DeFi like dries up for a brief period of time surrounding the merge, right? What if, you start to see people with, these anomalies in people's behavior, have unintended consequences like liquidations in DeFi, right? Because now people are under collateralized or something like that. Right, so some of this is already starting to happen, okay? I'm not saying it's on a massive wide-scale panic. I saw this pop up yesterday. Of course, we saw Aave, suspend temporarily certain, behavior on their application surrounding the merge as well. It's a popular DeFi application. We saw this come up yesterday. Of course, there's some response from Dapp here, so I'll definitely include that in the commentary. But basically, we saw this tweet come up that was kind of evidence of this. So Aave pausing ETH markets causing Dapp to unwind massively in the staked ETH to ETH pool, and 3AC pulled their pool liquidity, making it worse. Then we wake up back up in July. Basically is the next leg down, going to be the exact same trade unwinding. Of course, we saw a response from Dapp here, basically saying I was suggesting look at the data before it makes such a claim. It was less than 2,000 Ether. It's not Dapp, it's the users. Anyways, that's the full conversation for context. But the whole point here is stuff is starting to get a little bumpy, okay? And some of that's got to do with user behavior, anomalous user behavior, surrounding the Ethereum merge is a factor in a lot of this. Is my humble opinion. Okay, so what's going to happen next? Well, I've seen lots of the question is it's always the $1 million question. No pun intended for lots of people. So the real question is, are we going to see some relief from this leg down? Is it merely a temporary setback? Okay. Or are we truly starting the next sort of leg down to make new lows in crypto? Now, I really don't try to predict short-term stuff too much, but you know, I'll give you a couple thoughts to chew on here. Again, it's not financial advice. You know, I'm not myself personally trying to do short-term trading based on this information, but I still think we do have some you know, shells left in the shotgun for the Ethereum merge, in the sense of there's still some potential upside leading up into the merge. You know, in the next week or so. Okay, so that's kind of my take on it. All right, again, it's not no guarantee. Now after the merge, things could it could be a definitely different story. Okay, my base case right now is to expect some volatility around the merge. Okay, now the upside that I'm talking about could honestly be shortcut a few days prior to the merge, right? Like if the merge trade is still on, yeah, you're gonna have people that want to get out of that, you know, sooner rather than later. And there's the other view that the merge trade's already over, right? There's a view that the merge trade started here and ended here. So, you know, time will tell. But those are some perspectives to kind of chew on. In terms of, you know, crypto continuing on a downtrend and making new lows, let me just pull up the bigger chart here on BTC. Hold on. So I mean, our previous low was I mean, what prints on, like, you know, coin market cap or coin gecko in terms of the price history is we're basically back at those lows, you know. So the question is, are we going to just keep falling further from here? I mean, I saw Bitcoin, I think, trade on like $16,000 you know, on some exchanges. So the question is, like, are we going to make new lows? You know, I've been saying for several months now that I think it's very possible that the prior lows that we saw sort of are going to be the bottom. Now, that being said, we're basically back there. Okay, so are we going to keep? Could we potentially go lower than this? I mean, anything is possible. So I think it is possible we start to make new lows. My still bet, though, if that becomes true, is that we see most of the pain. All right, that's still my view here. So even if we do decide to make some new lows beyond this, like, I still think that we see most of the pain. Okay, you know, if we're talking. Let's actually look at our percentage drawdown here, because I mean, of course, I could get fancy and get a nice chart that does this automatically for me. All right, we're talking a pretty steep decline. Let me run the numbers here real quickly. 68 minus 18. We're already looking at pretty close to a 75% drawdown. Okay, and you know, Bitcoin did minus 85% last bear. Okay, and my view here still is, you know, if we're talking about diminishing returns, diminishing losses is also consistent with that. Now, you could also say that the broader economy totally throws a wrench in all that. The fact that we've got inflation to what it is, that you know, we're fighting the Fed at this point. That's a whole different ball game, and you can't look at past performance to have any indication of what's going to happen in the future. That's also a view to consider as well. So, you know, but yeah, I have to look at it this way. All right, if you're playing the long game in crypto, which I definitely am, and of course, yeah, I don't really give financial advice on this channel, but I think that's a good thing to do. I'll put it that way. You know, that means if we're seeing most of the pain here, of course, it could get boring for a little while in terms of price action. But if we see most of the pain here, then that means pretty soon, like relatively soon on the grand scheme of things, I mean like tomorrow, that we're going to start looking at upside, okay, especially when we have that much, you know, downtime, okay. And the good news is, you know, if we get even closer to a time where we can start to see, you know, economic prosperity, okay, a period of expansion rather than a period of tightening, then that can really be a massive tailwind. And I think it's really just a matter of time before we get back to that point, okay? So we got the CPI numbers coming out pretty soon, which will give us some sort of indication on the progress that we're making with inflation. Okay. Now, the real problem that a lot of people are worried about is still what's going on with the energy prices in Europe. So let me just pull this up here. Hold on. So we're still seeing, international conflict with the Russia situation here, and now we have, Russia has cut off gas supplies to Europe indefinitely. Okay. People are very concerned about the prices of energy in Europe, especially as we enter into the winter months when, we're going to be heavily reliant upon energy to, stay inside, stay warm, all that type of stuff. Okay. And so that could cause costs to rise significantly, and that can have, pretty big effects throughout the cost of everything. I mean, as energy prices increases, pretty much everything gets more expensive. All right. Just similar to how gas prices, when oil is going up and that makes gasoline go up, pretty much everything in an economy that's transported from one point to another that has a cost of transportation associated with it, which is basically everything, basically every good, that also is impacted by oil prices as well. It's a very similar relationship. So that's another sort of boogeyman to fight in the broader economy right now, particularly in Europe, which is a pretty significant player in the global economy. So, it's not all sunshine and roses and clear skies, but I think that we can get past some of these things to where, sort of we get the worst of the economic headwinds out of the way, and then we also get some of the worst of the crypto sell-off out of the way to where we have, much clearer path ahead. And I'm still pretty excited about the Ethereum merge because, in my opinion, I think that the ETH merge, long term, will have an impact on the price of Ether itself. Okay. And so, we've got that coming up next week. Again, the ETH merge is Ethereum switching to proof of stake. Let me just pull this up here. So that is most likely going to be on like Wednesday. Let me just pull it up. Hold on. So anyways, we got Ethereum merge coming up. All right, so Ethereum moving proof of work, proof of stake. ETH is most likely going to become deflationary over long periods of time, which means there's going to be less ETH every single year on an annualized basis. And if we just have consistent demand for Ether, assuming that it stays the same as it has over the past few years, on larger time frames, all right, I realize that the demand has dropped some, especially with the quietness of the crypto space, migration to layer 2s, all that type of stuff. But if we can have the same level of activity that over long periods of time, that means it's going to be less ETH on the market every year, which means, based on some basic supply and demand economics, there's less supply. If the demand just stays the same, that is going to have a positive impact on the price of Ether. And so you combine that with basically, that's the supply side of things, but the demand side of things is, there's going to be more reasons to hold ETH after the merge. So you have to hold ETH in order to stake it. ETH is a very blue chip asset. The staking yields are going to be pretty significant, for an asset like that. And then you've also got an asset that, ostensibly has a significant amount of financial upside, okay? Because, think about it this way. Let's say the merge happens and ETH pumps to $2,000, and then it dumps again back down to like $900 or like $1,000, okay? So, and now, the proof of stake has been turned on. Let's just assume the ETH merge happens. Let's assume there's no significant problems, okay? And now you can buy ETH for $1,000, okay? And then you can put it into a validator, and it can generate you, somewhere between 5 and 10% returns if you combine the staking rewards plus MEV boost plus the transaction fees, okay? Let's just assume the numbers are somewhere in that. And then you have an asset that ostensibly, can 5x in price, okay? Like ETH's all-time high was basically, basically $5,000. A little bit less than that. It's like $4,800, something like that, okay? But when you're talking about a risk-reward scenario of like, if you bought something that has that much like that like has a potential 5x in it. Okay, and then it can sit there and just pay you passive income while you're waiting for it to go up 5x, and then it's probably not going to go down. Like it's not going to go down by 5x, right? Like for ETH to go down that much after it's trading at $1,000, it would have to go to a very, 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 very low price. Okay, now anything could happen, but when you're talking about likelihood, like that's a amazing risk reward scenario, especially to deploy large amounts of money. Okay, because any like degen, like with $500 can go YOLO that money into a smart contract that has high risk, high yield, yield farm or something. But the problem is like that you get a complete rug pull, and you have to trust that smart contract. And then also that yield is probably going to go away really fast, and you have to find somewhere else to get it. But if you can just park your money into something that has sustainable yield over a very long time frame, and then you're not worried about your principal going to zero, and that principal has a high likelihood that it'll 5x in price and probably way more than that over a very long period of time, that's super attractive for big money, big money. Okay. So, especially with everything that's got going on for it with Ethereum, its potential in the future. Okay. Ethereum being very credibly neutral, open source, decentralized blockchain, potentially, the Linux of finance for the future. Okay. So that's huge. That's the demand side of things. Lots of reasons why the demand for ETH can go up over time. So, and that is turned on with the merge. That's the whole point I'm trying to say, is like the merge has huge implications for both supply and demand for ETH. Okay. And then also you're talking about, miners are no longer going to be in the equation. And so a lot of the sell pressure that comes from miners on a daily basis, okay, will likely decrease, okay, because stakers are going to have a much more vested interest in the network itself. And some people say that's BS, because stakers are just going to sell their ETH that they get as reward too. Some will, but I think there'll be lots of people who are incentivized to keep stacking validators, and that will hold the ETH, okay. So I think it'll be less sell pressure from stakers than there would be from miners. And so all that's like all that's has huge implications on the price of Ether for the long term. So, I mean, everybody who's kind of sitting here, trying to do a merge trade, for peanuts, it's like, that's kind of short-sighted in my opinion, based upon the long-term, possibilities that are here for Ether. Okay, so again, it's not any hate on anybody who does short-term trading. Lots of people do different stuff with their money based upon their short-term, mid-term, long-term goals. I don't do a lot of trading myself. I do some, right? But I don't really trade ETH, right? Like I'm holding ETH for a very long time. I mean, you might have good reasons why you want to do a trade like that. Maybe you timed the merge trade perfectly. Maybe you got in and got out right at the right time. But I'm just talking about how I think about it for myself personally. I think it's kind of short-sighted to try to be too excited about a merge pump, and more about what the merge means for ETH over the long term. And so anyways, I'm probably gonna make a video about this and spell it out in more detail, but what that can also do is like these supply and demand factors that I'm talking about, like, ETH, sort of having more reasons why you want to hold it, like more people getting into staking, okay? And then basically, ETH becoming deflationary over long periods of time, being less ETH, the supply side of things as well. And both those things impacting the price, like that's something that is a recipe for like organic, like non-hype based growth of a crypto. And I think that's something this market really needs. And that could honestly be the single thing that brings back a mega trend in crypto, okay? Because if that starts, like, because sometimes bull markets happen for a variety of reasons, right? Really, at the end of the day, like bull markets start to explode whenever price has just gone up and people start chasing that momentum. So the whole point here is momentum really is what creates bull markets. All right, that momentum can get generated from a variety of things. It can get generated from hype. It can get generated from adoption. It can get generated from anything that somebody points to, any metric where somebody says, look, this number is going up and the price is going up, and therefore we can add all these like narratives and blah, 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 blah around it. All right, and so basically like the price just has to start going up for some reason. And the ETH merge literally could be the thing that causes that price to start going up based upon these supply and demand factors that I'm talking about. And one thing that could definitely like pour gasoline on a crypto bull market is if the thing that I'm talking about causes ETH to actually flip Bitcoin inside of a bear market. Because think about it this way, Bitcoin is $18,000 right now. Okay. It was $18,000 in what was it, July? Or June? Is that when we saw our last sort of major sell-off? Let's just see when it was. Time starts to kind of run together on me a little bit. Yeah, that was in July. Or sorry, June. Okay, so ETH was $900, I think, around that time. All right, so ETH is now $1,500 basically. So what does that mean? That means that ETH is outperforming Bitcoin. It's holding its value better. So if you look at the ETH to BTC ratio, that means ETH is basically 50% of the way of flipping Bitcoin. Okay. So we're making, like we started to, we're starting to get to these levels pretty close to where we were back at the top of the prior bull market. All right, if we break past that, like that's, like there's nothing really beyond that till here, okay? And if we break past that, like we could very easily break past this and very easily get to a flipping. Because typically when things start to break past resistance levels on a technical basis like that, then they want to find the next thing. I'm not a big TA guy by any stretch of the imagination, but I think that stands to reason. Okay, because right now, like we're over halfway there. Okay, and so if ETH were to basically just do a 2x, let's say ETH just 2x'd surrounding the merge out of sheer hype around the merge, while Bitcoin's sitting here playing the sandbox at $18,000. Flipping. Right. So it's possible, right? I'm not saying this is going to happen. I'm not saying that ETH's going to flip Bitcoin like right before the merge, but you know, it could. And even after the merge, based on the supply and demand factors I'm talking about. So anyways, if ETH starts to get organic price, organically increase in price based upon the value accrual that I'm talking about, supply and demand factors changing, it could organically grow in price, and that could cause the flipping in and of itself, especially when people are not finding good reasons to own Bitcoin. And that could help us close the gap for the remaining 50% that we would need in order to flip it. Now, I don't think that, you know, ETH is just going to rocket up in price and Bitcoin does nothing, all right? So we'll probably see ETH is just going to have to outpace Bitcoin significantly. But we could see a big pump right before the merge, while Bitcoin's sitting here struggling at 18 grand. That could cause it. Now, if that happened, though, I think it would be temporary, right? Because, you know, we'd likely see, if ETH goes up that fast, it's probably going to come back down. But it's something to think about. Which L2 would I recommend? Optimism, Polygon, or Arbitrum? I would try a lot of different stuff. I mean, I don't really want to like pick winners here. And then ultimately the market's going to decide. You know, Somebody says they pay their rent in ETH. Stop using bank accounts completely. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That'll help these videos out so the more people can learn about blockchain. And, if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find those free courses there. They're like Udemy courses, but they're totally free. And if you like those and you went to the next step, or hey, maybe you want to take a master shortcut entirely, I can show you how to master blockchain step-by-step, start to finish, over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching.